Good morning and a warm welcome to our digital new food conference today. We are very excited to have several companies from this space present themselves, and we're going to cover a wide array of aspects in the food industry, starting all the way from crop breeding to food delivery. We will kick off this event with KWS SAAT, a leading crop breeding company focused on developing and distributing seeds. We recently started coverage of KWS, and I will supply the link to our research shortly in the chat box below. The company will be presented by Peter Vogt, who is Head of Investor Relations. And before I hand over to Peter, a few housekeeping issues. First of all, we will record this presentation. If you have any questions, please enter them by writing into the chat box on the lower right-hand side of your screen. And the presentation and Q&A will last 30 minutes. With this in mind, Peter, the floor is yours.
Thank you, Holger, and good morning, everyone. Thank you also for hosting this nice conference. And it's actually kind of a coincidence that we are number one here in the schedule, kicking off this day. Because no matter if you talk about new food or established food, we believe everything starts with a seed, and KWS as a seed breeding company is exactly there. We are breeding seeds for the worldwide agriculture, and today I want to talk about the new things that we are developing in our portfolio, specifically looking at our vegetables business. And before I do that, I would like to start a bit with an overview of KWS very shortly, and then dive into the topic of vegetable seeds. As you may know, we have been there for a while, since 1856, and in the meantime we have become one of the leading seed breeding companies in the world, with 1.7 billion sales annually. And I would like to pick two elements here of the slides shown. One being that we cover 11 out of the most important crops worldwide. So we believe in crop diversity. We are not just concentrating on one big thing like corn or soybean. So we believe in diversity, not only from a portfolio perspective, but also from a perspective of crop rotation, which is extremely important these days for preserving soils and biodiversity as well. The second element I would like to highlight here is the 326 million euro that we are spending in research and development. And you may have the association of agriculture as a very basic thing, but in fact, our business is high tech. It's innovation, and we are targeting nothing less than improving crops and adapting seeds to a changing environment. And as we are all aware, the environment is changing, and that's why rapidly, and that's why I think the challenges and the need for adapting seeds is higher than ever. A quick look on our history, and I don't want to go through the different phases, but I want to like to highlight that we have started very early with certain things where we still have leading positions in the market. If you look at sugar beet, and I think this is what KWS is known for, kind of the global market leader or the market leader in that space. But we have entered other areas in the course of our history, starting with cereals in the 1920s, with corn in the late 50s, and you could say the new kid on the block in this concept is the vegetables business, and which I will talk about later in more detail. Just a quick look to give you better understanding of the market. So there are not so many significant seed breeding company out there anymore. There has been quite a process of consolidation. KWS is nowadays number 6 in the world, but if you look at the pure play seed companies, there's actually only one listed pure play seed company in the Western world, which is KWS. All the other companies that you see here, Bayer, Corteva, and BASF, they all have a sizable chemicals business in their portfolio. Vilmorin, French company, which used to be publicly listed also until 2023, is also a seed company, but has left the stock market. In Europe, we have a even stronger position, number 2 after Corteva. I think this is important and shows also our strengths in terms of regional diversification. So KWS in Europe is quite a big name. On the right side, this is the market everyone is fighting for, with some big elements in it: corn and soybean, the dominating crops in North and South America, but also interesting areas, you could say niche, but still in size and development really interesting. And one of those interesting niches we discovered is vegetables, and we have started a process 5 years ago to develop our portfolio in this direction and become a significant player in the vegetable seed arena. Just for those who are not aware of our business, I think this is a slide which is very important to understand. We have extremely high seasonality in our business. This comes with the fact that we are delivering our seeds, especially in one quarter before the sowing season in the Northern Hemisphere, so North America and Europe. So in 3 quarters, we do a little bit of sales and a negative result. And in 1 quarter, our 3rd quarter, we do around 60% of our annual sales and more than 100% of our annual EBIT. So extremely seasonal. For us, the Q3 is the most important one. And this is what we work for, and to make sure that we can supply the necessary demand in the market in the specific time frame. KWS has been extremely successful over the last couple of years with a sales CAGR of around 10%, and the profitability CAGR is even higher. This was due to our extremely successful variety portfolio, but also in general very good conditions in the agro commodity market this year. And we have reported our Q3 figures 2 weeks ago. This year looked a bit different, with lower acreages in some areas of our portfolio, driven by low commodity prices. So we kept our sales stable this year and delivered robust profits despite significant headwinds. And I think this shows also the robustness of our business concept and our setup, that even in difficult times we are able to deliver good results. So much about KWS in general, and now I would like to start talking a bit more about vegetables. Vegetables, I mentioned, a quite sizable part of the seeds business, and for many aspects, very interesting market. And this relates so this about 7 billion out of that pie, and you could say the 3rd biggest market in the seed arena. Why is vegetables so interesting? First, we have seen over the last decades a huge increase in vegetables consumption, and due to changes in diets and kind of the consciousness of a more healthy diet, this trend is continuing. Maybe not at the strong pace that we have seen here in the 90s and especially the 80s and 90s, but still a growing market combined with a growing number of people living on Earth. This provides a significant underlying demand. In the last couple of years, the vegetable seed market has grown in the high single-digit percentage range, and we expect this is going to continue with growth of 5 to 7% going forward. Vegetable seeds is also very attractive from a profitability point of view. Companies in this area earn really very profitable margins with 20% EBIT and higher. So it was an attractive area, but we didn't have much of kind of history in the vegetables. But in 2019, we decided to acquire a leading company, especially in two crops, a Dutch company named Popfriend, to enter that market and to build our business or vegetables business from there. Popfriend has been and is still the market leader in spinach seeds and has also seed business for beans, Swiss chard, and red beet. But the more interesting crops are the ones on the lower side of the slide, the fruity crops: tomato, pepper, cucumber, melon, and watermelon. And this was, so to say, the starting point for us, taking a existing business and starting from a presence in the vegetable market to grow into also those areas. Just to give you an idea of the size of the addressable market, so about 7 billion in total size vegetable seeds. And if you look at the different crops I mentioned, so the 4 field crops and the 5 main fruited crops in this area, we're talking about a market potential of 3.5 billion euro, which is quite significant for an opportunity for a company like KWS. So tomato is not a tomato, and there's also with other crops you see a huge differentiation. So be it the product type, be it the region, be it consumer preferences with regard to color, processability, taste. So it's a very diverse universe and place, and we're addressing those with distinct breeding programs that we have set up. But how did we do that? Because as a newcomer, you have to, first of all, lay the foundation to really start breeding. And what it takes to start breeding is people, breeders. You need land and you need seeds. So what we did in the last couple of years, we built the infrastructure necessary to be successful in the future in that area. So especially in the hotspots of vegetable seed breeding, which is Southern Europe and Middle and South America, we built breeding stations, hired breeding personnel, and started breeding. And very important here to mention that we are now have in all regions that we are targeting for the time being the necessary resources to kind of pursue our programs and to come to first results. And starting 5 years ago, you may wonder when is the time that we are seeing products coming out of it, and it's actually now. So we're expecting the first varieties out of that program coming out of our own breeding activities coming to market this year. So we are not only in the kind of preparation of breeding phase anymore. We are already preparing for commercialization of the new products going forward. This costs us a little bit of money because we had to build resources for future business. If you look at the picture here, we see on the left side an existing business coming out of the Popfriend business and a small business with tomatoes already of 62 million in the last year, with a nice underlying profitability of above 20% EBIT. 14 million out of that business was a profit. And we invested, on the other hand, 29 million in building those resources, and also including an effect on the purchase price allocation of the previous acquisitions. This segment is making losses, and this is going to continue until we are seeing the top line grow, and we expect, and this is also gives you a bit of a flavor, what are the time frames we are looking at. We're expecting to reach break even for that business only in the early 30s. So there's quite a way to go, but those are planned expenses we are making. We are used to do that. In breeding, you need a long breeze, because it takes a while to finally have a product at hand. And this picture gives you an idea of how long it can take. In vegetable breeding, I think we are a bit faster, but starting from scratch, developing or breeding a new variety can take up to 8 to 10 years. So this is the horizon we have in mind, and we are willing to invest in that business because of the good outlook and the good prospects in this area. And as KWS has shown in the past several times that we are able to reach our goals over time, we are quite confident that this will be also the case for the vegetables business going forward. This concludes my presentation. Thank you for your attention, and now I'm happy to take your questions.
Thank you so much. We do have a few questions already, some of which I already answered in the course of your presentation. The two questions that I have here are focusing on the, not surprisingly, vegetable business. And one question is addressing the long-term growth potential. You've already said how big the market is, but I think it was 7 billion out of which 3.5 billion you can address. And the question was what impact this has on your overall long-term growth scenario when it comes to revenues and margins. And you discussed the margin break even, which you are planning for the early 2030s. Can you be a little more specific, maybe also on what top line you would expect to go break even in this business?
Yeah, so maybe differentiating a bit on between top line and bottom line. So top line, this is expected to grow from today on. We have bought this business at a higher sales level. Corona came in between, and this portfolio that we acquired was, you could say, a bit vulnerable to what happened during COVID. Now we are at the level that we are seeing growth again, this year double digit, and we expect to continue based on the existing portfolio and also with the new varieties coming to the market. So we will see, we expect to see a growth also in the next years. What is the level of profitability we are, let's say, or what's the level of sales we need to reach break even? And this depends a bit how you plan, let's say, depends on your ambitions that you have. So do you want to be at a 100 or 150 million company, or go further? So the ultimate goal is to reach 5% market share for us in the 30s. So that probably in the late 30s, and this translates to about 250 to 300 million euro. So break even will be reached earlier, and if we reach, let's say, the level of 300 million euro at the end of the next decade, this will come with a let's say, or we're planning for a margin at the 20% that I mentioned. So early 30s break even, and then growing into profits in the course of the 30s, which is from now on, it's for you, it's a long time maybe, yeah. But on the other hand, this is how we look at businesses. We look at the we have a very long view on that. And this gives us, let's say, the opportunity to grow also our business, our total business in 10 years and going forward.
You've already touched on the next question during your presentation as well. However, maybe you can be a little more specific. Key drivers that make the vegetable seed market attractive for you. Is it urbanization, healthy eating habits, food security?
It's all of those. It's and I would also add another aspect, which is, let's say, the market dynamics. We are seeing a lot of, let's say, smaller, you could say, mom and pop breeders trying their best to come up with good varieties, and KWS with its R&D power, we believe we can make a different there and distinguish ourselves, and with our background and our knowledge about breeding can really build a portfolio there. So there is the market trends, the characteristics of the business, so high profitability, high growth, and a good understanding of how things need to be developed to be successful.
Thank you. Mega trends. We have, on the one hand, the mega trend of food, of course, and growing population, and on the other hand, the mega trend of climate change. And those two somewhat belong together, I would say. So the question reads, how is climate change impacting your product development? And how are you responding to these challenges and opportunities strategically? And an add-on to this question would be, how does KWS plan to leverage new technology such as genome editing and digital agriculture in this context?
This is a great question, because this is the engine, and you mentioned those drivers, climate change. This is the engine of our business. So think of, for example, a variety a cereals crop that you're seeing on the fields, and there is, let's say, a phase of drought, 3 or 4 weeks, that we are seeing even in mid of Europe, not only in Southern Europe. And those crops need to be kind of robust enough to stand those phases. So, for example, drought tolerability is a major topic in seed breeding that we are addressing. So we are trying to find those crops that tolerate drought and low irrigation better than the others. Yeah, thinking of disease resistance with a changing climate, new diseases coming to the market or coming to the fields, biotic or non-biotic. So you may read about the grasshoppers that influencing or damaging harvests. So make plants resistant against that, and with that comes also, let's say, the promise and the ambition also to reduce, let's say, the impact on the environment. So if we are able to seed a plant that is resistant against a fungus, for example, or an insect, you don't need chemicals anymore. So this is also something that you have to keep in mind, that we are shifting value from the chemical side into our seeds when we are able to develop those resistances. So resistance breeding is a big topic in our R&D portfolio and R&D strategy. This is the future, and this is, you could say, a wide field. There are already examples in our portfolio where we managed to do that, and we also could show, let's say, the transfer of value into our seeds, especially in the sugar beet breeding, where we developed resistant crops that exactly did what I described. So this is exactly what you mentioned, and this is a big engine for our business in general, and especially for our R&D.
Thank you. I have a question which you might have partially touched already. Can you just one more time clarify which regions and crop types currently offer the strongest potential for revenue growth and margin improvement?
We believe that all our businesses have the ability to grow. Yeah. So I would not make a distinction here. If you look at, let's say, certain markets, you see different growth expectations. For example, vegetables belongs to the one with the highest growth expectations, whereas classic established seeds provide lower growth in the low single-digit range. Yeah, and our general ambition is to provide varieties to the market that allow us to, let's say, grow at a faster pace than the general market is growing.
And of course, you need a balanced portfolio, because the one is, even though it's not growing strongly, is having stable margins, whereas the other one is still loss-making and growing into profitability, correct?
Absolutely. So if you look at vegetables, for example, we look at the portfolio, let's say, with a portfolio view on it. Yeah, and of course, we wished that vegetables would, add profits right from day one, but this is not reality. We have to make advanced investments to, let's say, harvest at a later point in time, and sometimes it takes 10 years to see the results. And I could give you a few examples where we are now leading in some areas, crops where we did exactly the same. So, and also if you look at how much of our investments in R&D go into vegetables, for example, it's still a small part. So of the 300+ million R&D money, we spent 20 million plus in vegetables. So that gives you also an understanding how much we dedicate. We don't bet on just one horse. We also kind of support our other businesses. There is no business where we cut, let's say, development and just leave it out or let it go. So all our business that I described have, let's say, a supporting R&D pipeline behind, and that gives us, as you mentioned, Holger, the stability and the balance going forward.
Great, thanks so much. We're very good on time, so we come to the last question, which is detailed, because it is addressing one crop in your portfolio, and that's the sugar beets area. It seems like there have been lower crop areas dedicated to sugar beets. Can you just tell us a little about the current demand situation and how you see that developing this year going forward?
Yes, so exactly right. So this year we have seen a decline in acreage, but you have to keep in mind that last year with the high sugar prices, the sugar beet acreage went up actually by the same amount. So actually we are coming back to a normalized level. We calculate 4.5 million hectares acreage for sugar beet worldwide, and this is exactly where we are landing this year. That was driven by kind of the underlying commodity price. Sugar has declined. Also, the stocks available in some markets were fairly high because of the high harvest. So it's a kind of cyclical development. We expect that sugar beet acreage will fluctuate around the 4.5 million hectares that I mentioned. So we don't think that this is a kind of structural decline in acreage. Sugar beet farming plays an important role, and we believe that will also be in the future. And so the decline this year, it was a kind of special effect, but other companies would post a decline in sales, and we managed to even increase our sales, which shows also the strength of our portfolio in this area. So I think if that was a really a kind of good test to see how robust our business is. And of course, we are not out of the market, we are part of the market. But our assumption going forward is that we will be around the 4.5 million, so stable acreage.
Super. Thanks so much. It's 9:59 and 45 seconds. Right on time, Peter. Appreciate the insights that you're giving us. We will continue with GEA Group. I just posted the link to the next meeting in the chat box. Appreciate you all showing up and showing the interest in KWS SAAT. And once again, the research is available on Research Hub. Thanks so much.
Thank you all.